Hey everyone, welcome back to Money Talks. If you're new to the world of investing and want to learn the basics of stocks, bonds, and mutual funds, then you're in the right place. In today's video, we'll be covering Investing 101, a beginner's guide to stocks, bonds, and mutual funds. Make sure to hit that like button, subscribe, and let's get started. Before we dive in, it's important to note that investing always carries some level of risk. Make sure to do your own research and consult with a financial advisor before making any investment decisions. Now let's start with stocks. When you own a stock, you become a shareholder in the company, which means you have a claim on the company's assets and earnings. There are two main ways to make money from stocks: capital appreciation and dividends. Capital appreciation occurs when the stock's price increases, allowing you to sell it for a profit. Dividends are payments made by the company to its shareholders, usually as a distribution of profits. Keep in mind that not all stocks pay dividends, and stock prices can be volatile, so it's essential to research and choose your investments wisely. Now let's take a closer look at bonds. Bonds can be issued by corporations, municipalities, or governments to raise capital. The issuer sets the interest rate, also known as the coupon rate, and the maturity date when the bond will be repaid. Bonds can be traded on the secondary market, which means their prices can fluctuate based on factors like interest rates, credit quality, and economic conditions. Generally, bonds are considered a safer investment than stocks, but it's important to understand the credit quality of the issuer and the interest rate environment before investing. Finally, let's explore mutual funds in more detail. Mutual funds are a type of investment vehicle that pools money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other securities. They are managed by professional portfolio managers who make investment decisions on behalf of the fund's shareholders. The main goal of a mutual fund is to generate returns for its investors, either through capital appreciation, income, or a combination of both. In a mutual fund, each investor owns shares, which represent a portion of the fund's holdings. The value of these shares, known as the net asset value, fluctuates based on the performance of the underlying securities in the fund's portfolio. Mutual funds provide investors with an easy way to access a diversified portfolio, which can help reduce risk and potentially improve returns over time. Some key features of mutual funds include diversification, professional management, and liquidity. They come in various types such as equity funds, bond funds, balanced funds, and sector funds, each with its own investment objectives and risk profiles. Now that we've covered the basics of stocks, bonds, and mutual funds, let's talk about developing an investing strategy. Your strategy should be based on your financial goals, risk tolerance, and investment time horizon. Here are some key points to consider when building your strategy. Diversification. Spread your investments across different asset classes and sectors to reduce risk. This can be achieved through individual stocks and bonds or by investing in mutual funds and exchange-traded funds. Risk tolerance. Understand your comfort level with market fluctuations and potential losses. If you have a low risk tolerance, you may want to allocate more of your portfolio to bonds and less to stocks. Time horizon. Consider how long you plan to invest before needing to access your funds. Longer time horizons typically allow for more aggressive investment strategies, while shorter time horizons may require a more conservative approach. Regular contributions. Consistently investing a set amount of money over time, known as dollar cost averaging, can help reduce the impact of market volatility and improve long-term returns. Rebalancing. Periodically, review and adjust your portfolio to maintain your desired asset allocation. This may involve selling some investments and buying others to keep your portfolio in line with your risk tolerance and goals. And that wraps up our beginner's guide to stocks, bonds, and mutual funds. Remember, investing always carries some level of risk, so make sure to do your own research and consult with a financial advisor before making any investment decisions. If you found this video helpful, please hit that like button, subscribe to our channel, and share it with your friends. If you have any questions or suggestions for future videos, leave a comment below. Thanks for watching, and happy investing.